Today, we're diving into one of the most exciting developments in fintech. Monzo, the UK-based neobank, has just hit a $5.9 billion valuation. This isn't just another milestone for Monzo, it's a clear signal that the neobank space is maturing and gaining serious traction. Let's break down how Monzo achieved this valuation, what it means for the company, and where it's headed next. Monzo's latest valuation bump follows a secondary market share sale. This type of transaction allows investors, like Singapore's sovereign wealth fund GIC and Stepstone Group, to buy additional shares, providing liquidity for employees without the company having to go public. It's a smart way for a high-growth company to reward its employees and buy time before an IPO. Monzo has been on an impressive funding streak. Just this year, they raised $190 million, on top of a $425 million Series 1 round. Investors like Alphabet's CapitalG and GV co-invested, something we rarely see from Alphabet's venture arms. To put things into perspective, Monzo has raised around $1.5 billion since its founding 9 years ago. That's significant growth for a company still considered a challenger in the banking space. Back in March, Monzo's pre-money valuation was $3.6 billion, or around $4.6 billion. After their May fundraise, this increased slightly. And now, with this latest valuation bump, Monzo is sitting at a solid $5.9 billion. What's driving this growth? A key factor is that Monzo recently reported its first ever full-year pre-tax profit, which doubled its revenue from the previous year. That's a huge milestone for any neobank, as profitability has been one of the biggest challenges in this sector. Monzo now claims to serve 20% of UK adults and 6% of businesses, which are impressive market penetration numbers for such a young company. Monzo's roadmap is also a major driver behind this latest valuation. They have big plans for European expansion, and they've been accelerating their presence in the US market as well. In fact, Monzo appointed a new CEO for its US operations last October to spearhead this initiative. The US is a tough market to crack, but if Monzo can replicate its UK success stateside, we could see its valuation continue to soar. Meanwhile, its rival, Revolut, recently hit a $45 billion valuation following a similar secondary market sale. This shows just how competitive and fast-moving the neobank space is right now. While Monzo's growth story is impressive, it's not without its challenges. Regulatory scrutiny and competition from established banks and other neobanks are major hurdles. And as always in fintech, maintaining trust while scaling fast is key. Monzo has managed to stay agile, but how they handle compliance, customer service, and new product rollouts will determine their long-term success. Monzo's rise to a $5.9 billion valuation is a testament to the power of innovation and strategic growth in fintech. From securing major investments to reporting their first profit, Monzo is setting the pace in the neobank space. With plans for further expansion in Europe and the US, all eyes are on Monzo to see how they continue to evolve. If they can keep up this momentum, we could be looking at one of the most influential players in the future of banking. If you found this breakdown insightful, don't forget to subscribe to Fintech's Fair Play for more expert analysis on the latest in fintech. Stay tuned for our next video, where we'll dive into another major fintech success story.